What's up, everyone? Max back again. It's March the 1st or the 2nd, probably the 2nd. It's a new month, it's a new Monday, and that means that there's a new Bitcoin forecast in store for y'all for today. So, last couple weeks, I was looking for that Ponzi move, and if you don't know what a Ponzi move is, this is a fucking Ponzi move where price just goes vertical for no reason, really. I mean, it's not like there's really a demand for Bitcoin, but we're looking for that Ponzi move. Whatever you think about the rumors or like Bitcoin coming up on a Wall Street penny stock. Bitcoin's a penny stock now, pretty much, that can be traded over the market or over the counter. But who cares? I'm pretty sure this is gonna dump, but we're in a bull trend right now, right? So let's just focus on being bullish. Let's review some stuff. Well, this week, I'm going to introduce a really special tool to me, the 14-day simple moving average. It's a concept that I took from some, institutional investors. I got it from Chris Laurie, who is kind of like a fund manager in Forex accounts, and he uses the 10-day simple moving average as kind of a dynamic support and resistance. But the Forex is open only 5 days a week, so he used the 10-day for a 2-week look or a 2-week measure on things. So I've adapted that to Bitcoin, and I've tested the 10 versus the 14 in Bitcoin, and the 14 definitely gives you more precise results, and it kind of aligns with some of our other views. We always want to be looking at the previous week's range, and we want to compare that with this week's range. And that's in the same vein that the 14-day moving average is taking the previous week's range or the previous week's price action and this week's price action all together. And so we're just looking at 2 weeks in quantifiable chunks. So, I just want to point out the 14-day moving average right here almost nails it. Another specification I got to make is that the 14-day moving average is perfect for trending markets, but you got to know if you're trending or ranging, because if you're ranging, it's just going to kind of whipsaw. It's kind of going to give you some false signals. But look at this, and y'all should go back. But I mean, y'all should go back and look at other stuff. But I mean, look, once we start trending, dudes, boom. Look at all this crap, dude. This is perfect. This is probably like trade entries within like a dollar risk. Look at the accuracy all in here. Look at the accuracy all in here. And then and then there's another example over here. Y'all can go back and look for yourself. But it's always like that. The 14-day moving average is pretty much the holy grail. And I don't like to use a lot of indicators, but when I am using indicators, they're measuring price. And I'm not using the same indicator all the time. I'm using the 14-day moving average on a daily chart in a trending market to kind of look for where my next buy should be. The 14-day MA also measures fair value in the market. You see it's kind of like an equilibrium point in the market. And so I'm kind of scared that we're getting too far away from the 14-day MA. And, I am starting to look for profit targets. In fact, I'm actually looking to take profits right now, partially, which, I'm happy to do since, we've been buying down here, right? Wait, where is this? This is 235. So we were even buying, where were we buying? Probably 230. Yeah, probably like right here, and then right here was last week, and then we took off. So take profits, man. I mean, what I'm seeing right now that's kind of scary, besides that, the fact that we are getting away from fair value a little too much, are these ICT order blocks right here. So an order block is just going to be the last bullish candle prior to a convincing move down. So what we're looking at is we're looking at this green candle right here. And basically, the premise behind that is that the huge pockets move the market. And, you know, me and you are not producing moves that move this violently. It's also acting on the concept that smart money sells at a buying. So this green candle is where smart money's selling. Once they've done all their selling, they move the markets. We don't move the markets. You know, it's not like me and you are just staring at Bitcoin wisdom and then we all just decided to sell, you know, our however many coins we have, not that many, even on 20 times margin. Um, it's not like everyone just decided to sell right here. There is a force greater than you or me that sold here that made this move. Just like there's a force that's greater than you or me that's making this move. Bitcoin's just really rigged, and that's how I view the market. Anyway, trying to keep these short, but I guess I'm doing a good job. You know, a bullish thing is that we did take out these highs. So, you know, obviously this is looking bullish. But, you know, what I really am looking for is a return to this moving average at some point. I mean, some point soon. If we were to just skyrocket up today and tomorrow, I would get extremely scared and I would start selling a lot. I'd really like to see price come back into like a decent retracement, maybe test like the bodies of these highs, and then start looking to break these order blocks and take out these highs, and then ultimately gun these highs. We want to see these highs taken out for sure. And that's definitely like my primary target. That's where I'm just staring right at, looking at like 320, and then observing what happens from there. But yeah, if we, I mean, we got to have some natural growth, man. This is just unnatural growth. If we were to go up too high, I would get very scared. It's kind of like Warren Buffett. I'm like the Warren Buffett of Bitcoin. When people are scared, you got to be greedy. But when people are greedy, you got to be scared. I'm feeling scared right now, because people are greedy. And if they want to buy it up, you know, they can buy it up a little bit. But if we're just going to pump to insane levels, that would actually illustrate weakness to me, and I would just be selling all into that. But who knows what's going to happen in the future? We might even just go straight down. I don't know. Let's think about the bearish scenario. There would be a huge dump, and this would just be another huge pump and dump scam. And that's a possibility. You know, just like a whole retrace, like all the way down to here, and then like people would be like, "Oh, Bitcoin's so cheap," and then it really would be cheap. But I'm not worried about that right now. I'm just worried about taking profits and looking for more opportunities to buy. Like we've been talking about, this is a huge consolidation. So what do we expect after a huge consolidation? We expect some sort of trend, you know, a trend that can last longer than 4 days, hopefully. So, you know, we're expecting, boom, we want to see this type of natural, healthy consumer adoption. So yeah, I would not be looking to buy right now, to be honest, because I already am positioned. You know, that's the beauty of, that's why we put so much work into these consolidations. This is, if you get this right, you really just have a stress-free, easy money-making scheme. You get to ride on the backs of the Ponzi makers, and that's my whole strategy. So for this week, I am looking for a retracement that's going to get us back to fair value, this 14-day EMA. And I feel like now is as good a time as any to do a little retracement. Like I said, if we do go straight up, that would be a bad sign. But if we could healthily retrace, let's say we retraced, a good level to be looking for a retrace would be somewhere like right here, 260. And actually, I'll show everything. I'll show a bunch of reasons, and I forget the exact target that I'm looking to buy at. But what we're looking for is okay. I would take an optimal trade entry from here, to be honest, just to and say this is the high. Say we put in the high and we're gonna retrace. God, that sucks. Yeah, that's a little better. So what we've done is this is a swing low right here. You have a higher high on this side, and you have a higher high on this side. So this is a low in the market. So 246 is a significant low in the market. It tested fair value. It kind of stop rated and faked out a bunch of people. It also went back and tested the lows of last week's range. You know how we're talking about there's a theme here. You know, I didn't pull the 14 moving day average out of my ass, right? There is value in looking at last week's range and this week's range, and looking at last week's data and this week's data. So, you know, all those things confluence. You know, there's confluence there. Boom, 246, just right on these highs from last week's range, and then we take off. The only way I can explain that is that in this consolidation, smart money is pairing orders, and as soon as it dips back into where they're willing to be buyers, you know, they're going to do a lot more buying. Now, I would buy at 257, and I would be looking at what this 14-day moving average did, and yeah, 257 does line up with the bodies of these candles as well. So if we do need to retest some resistance turn support, there it is. Optimal trade entry retracement. Actually, I forgot to mention another interesting reason why I'm getting kind of bearish. It's my equilibrium concept that I'm pretty proud of. That ICT showed me the equilibrium. ICT taught me that markets are always revolving around a like a central point, and they're always moving 100% in one direction and then like 100% in another direction. So, wait, is this that far off? I guess I'm so zoomed in, it looks like there's a big discrepancy, but you can kind of see how, so right here, this is an equilibrium. You see how there's, I mean, just price just loves this level. So that's why we choose these highs. Price has shown that it's kind of, this is at an equilibrium, this is fair value kind of. So we take a point where these highs exist and we see how far the lows go. That's going to be a swing. And I like to illustrate it like this because it looks cool. This is a swing in the market. And, you know, we use the Fibonacci's just to show like this is 0%, this is 100%. So this is a swing. And then we're looking for that point in the market where an equal and opposite reaction is going to take place. And it's looking like, boom, right there. And it lines up with our order blocks that we just talked about. And it also lines up with something else we talked about. I don't know, getting too far away from fair value. But yeah, so I would be cautious to buy, you know, it's really close to a 200% extension from this equilibrium. Also so far away from fair value. Now, we are in Ponzi phase, right? So that's not to say that shit could just not go up even more, because it could, but it's not a very high probability, or it's not very safe, because you're so far extended. Where do you put your stops? I don't know. And then you risk just getting massively dumped on. Yeah, it's just best to wait for retracement. So I think I covered a lot. Basically, the theme for this. Oh, dude, I had an idea. Hold up. I was going to give y'all the thought of the week with this book. All right. So the thought of the week today. What page? 65. Thought of the week comes from Mark Douglas in his book, The Disciplined Trader, page 65. I'll leave you with this thought of the day, and I'll leave you with, I don't know what else. I don't know what I'm talking about. But, okay. I just thought this was cool. I was reading this today, and it just reminded me of Bitcoin. And it's Mark Douglas, and he says, when you attain some degree of control over yourself, you can then see how other traders are not in control of what happens to them, like blades of grass, all bending to the force of the prevailing wind and constantly being stepped on. You won't be able to see this until you are no longer a blade of grass yourself by evolving beyond the group mentality. Then it becomes much easier to understand the group's behavior, anticipate what they will likely do next, and take advantage of it to the best of your ability. You will understand the group certainly to no greater degree than you understand yourself. That's some fucking dope shit to me. And then a couple more pages, he says, what you need to do is determine how the majority of traders perceive the external conditions in relationship to either their fear of scarcity or their fear of missing out. And we know that term to be scientifically coined as FOMO. And back in the 90s, Mark Douglas was talking about FOMO. And that just reminded me of Bitcoin because shit's going crazy right now. And you just got to be careful out there because I mean, Bitcoin's just a scam, dude. It's probably just going to go down and margin call a bunch of people before it goes up. I mean, and we are at resistance, I think. So that's my thoughts of just it doesn't necessarily just pertain to this particular trade setup we're talking about, but it also pertains just to trading in general. I thought it was cool. Just understand yourself and you understand the group. It's some fucking introspective shit. But anyway, moral of this video is we are bullish. We're gonna buy the fucking dip. Any dip that we get is a gift from God. We're gonna buy that shit. But if things get too out of hand, it's gonna look like a Ponzi scheme pump, and we're gonna want to be taking profits, not getting sucked into the trap of buying. So buy into the dip, don't buy into the pump. Have a good stop loss going, and get that money. All right, until next time, good luck and good trading.